Thoughts of getting rich seem way too nice. Pay it once, pay it twice. For survival, I'm willing to pay the price. Give it once, give it twice. Trading time for wealth until I die. Could sell the devil my soul and trade my body for gold. Well, except lo and behold, I might have grown way too old. Work myself to the bone. Shut up and do what you're told. Put green into my account. I'm sold on selling gold. Moolah, 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 moolah. Moolah, 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 moolah. Now the medium takes its toll. It's still so good, dirty or cold. Bear with me on my bowl. Wanna see those figures grow. Bear with me on my bowl. Wanna see those figures grow. Going once, going twice. Thoughts of getting rich seem way too nice. Pay it once, pay it twice. For survival, I'm willing to pay the price. Give it once, give it twice. Trading time for wealth until I die. Could sell the devil my soul and trade my body for gold. Well, except lo and behold, I might have grown way too old. Work myself to the bone. Shut up and do what you're told. Put green into my account. I'm sold on selling gold. Give me the money that can buy me happiness. It seems that a couple million you should do the trick. Hire a hand so that I'll never have to handle it. Right when I lose it all, I win the grands and grands of it. Could sell the devil my soul or trade my body for gold. Well, except lo and behold, I might have grown way too old. Work myself to the bone. Shut up and do what you're told. Put green into my account. I'm sold, I've sold the devil my soul. I trade my body for gold. Despite that, lo and behold, I might have grown way too old. Work myself to the bone. Shut up and do what you're told. Put green into my account. I'm sold on selling gold. Moolah, 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 moolah. Moolah, 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 moolah.
There you go, Brandon. Good morning, everybody. Welcome to TheoTrade Live. This is TheoTrade Live. And I'm Blake Young. Brandon is here. I think Brandon is here. I'm just going to
I'm here.
find it. Hey, there we go.
I'm the emotional support animal today, Blake.
You are the emotional support animal. You're the Blake Young emotional support animal. My son just released that music video, and I thought it was hilarious because he did the whole thing as far as the video construction and had J.P. Morgan and Vanderbilt and everybody in the mix of all that. There we go. I kept pushing on my video and it wasn't playing there. He did all the pictures of all the industry tycoons, and I just thought it was a little clever because the moolah moolah, and he had the stonks, which was what the cool kids say. So today is an interesting day because it is about moolah moolah moolah, and it's a fascinating situation we've got with CPI and PPI. The biggest reason that not only that I love our interaction and our time on these Friday mornings, but I wanted to have you on here to have your discussion of Bitcoin, and I figured we definitely need to come back and visit oil and some other things there. We're going to talk about earnings season launch and some deep currents and some of the things that we're seeing shift around there as far as what I've been talking about in our deep currents class. So to begin with, let's talk about PPI and CPI, unless you have something you want to start with before that.
No, I mean, inflation, it's a little hotter on the CPI side, but the PPI came in a little below expectations, at least for the headline number. But you were definitely seeing interest rate expectations shift a little bit. Cuts are coming off.
So when we're unwinding the cuts coming off and we're still seeing the inflation numbers, because I didn't see this as really good. I know people said, hey, see, it's even getting cooler. And I think it was more that it rose compared to, everything else. It rose. And the only negatives we had on CPI really were energy. We had used cars and trucks continuing to fade. Yeah. at negative 22, negative
Yeah.
15, negative 13. So how can we have a negative 22, negative 13 in crude when we did this in September? So we found the base, and this was what created negative 22%. When we saw prices in oil and energy drop, that's it. This is our 22% right there. And as we're looking at this, and it's actually not 22% in crude, but the cost of that, we went sideways and then we dropped back down. We made higher highs, higher lows. We climbed all the way back up. So we just went from 66 to 78, and we pulled back a little bit, a couple days, but really, and I've run the numbers on this, Brandon. I don't know if you've ever done this too. What I've done is I've gone in and put crude average price difference from day one. In that case, it would be right here, September 3rd, to the last trading day, September 30th. And if you take that and multiply it by about 20%, the difference is roughly what you would expect to see CPI come off. And so we're going to go from this close right to this close, and is about 5.5%. So we take that, we times it by 22, and that means, or 20%, and that means we should be seeing about 1.25% drop in inflation across the board. But what are we going to do if October is 15?
Right.
If October, if we got a target up at 82, 83, I wouldn't be shocked at all to see us get back up to 90 with the conflict that continues to go on in the Middle East. So if we go up 90, we take that now 30% and multiply it by 20, are we going to see inflation increase by 60% or 6%?
Yeah, I mean, it's pretty crazy to think about. I mean, and oil, I'm like, even set aside geopolitical risk in the Middle East, I mean, we're scraping the bottom of the barrel. I mean, if we generate any growth out of this increased demand, if China's bazooka creates any sort of demand, I mean, oil prices are going to go higher, and we may see the upside risk of oil, which is frequently priced into commodities, right? Where you have more upside risk than downside risk. And right now with backwardation, that's where we're basically pricing the upside risk in.
Yeah, and I think there's a lot more to go. And so going back to the CPI and PPI numbers, if we came in at 2.4% top line all items here, this is the CPI's numbers, as you can see here. If we came in at 2.4%, and what I'm saying is that in oil's portion of that is roughly 1% annualized because of the difference that we saw in September, this should have been 3.4. And if we're going to see it rise, this could be 8. If oil goes that far, this could be 8%. To me, that is not only a problem, it's frightening.
Yeah, but I mean, oil
high,
prices are always just, it's transitory, Blake. I mean,
it's transitory.
yeah, you just got to take that out of the equation.
Don't
It's
worry
too
about
volatile,
that.
Right?
Well, that's why they take it out. But it was X food and energy. I shouldn't leave here because the biggest thing that they talked about was shelter at 4.9, transportation cost 8.5, medical care at 3.6. And so food and energy, where's my food? Where's all my food? 2.3 up here. Restaurant food didn't go that much high, but shelter. So places you want to live indoors, eat food, and get to work. Those things, don't worry about those things. Those things are actually outside of what you need to worry about. That's why I don't like core. I just don't think it's a good representation of how it impacts the actual economy. As we look at PPI numbers, scrolling down here, September came in at 3.2, which is still high. It's still hot. And who's our negative? Energy. How much? 2.7. So what happens when we reverse that out in October? Not only reverse it out, but go twice the opposite direction. What happens if we put 2.7% not negative, but positive, and even go to 5.4%? Here, if everything else stays the same, this number is going to go back up to 4 or 5%. I mean, tell me I'm wrong. If by all means, tell me I'm wrong.
No, you're exactly right. It's just a matter of like, we're kind of like have, Powell out there kind of on the aircraft carrier screen, mission accomplished on inflation. And look, and we're just not. There's a lot of, we're not going to see this because again, we're going to see increased government spending. I saw gold, even after this dollar strength, dollar kind of strengthened a little bit. I mean, we had, with kind of the pullback post the CPI report yesterday, but gold was stronger. I mean, we have two major hurricanes hit. Government spending is not going to slow down, and so you still have those inflationary pressures being put into the system that's weakening the dollar. So gold actually did okay yesterday.
Yeah,
Um,
gold made it back to my buy list right there.
yeah,
And we crossed through, hit fair price on the week. This is just the weekly, perfect distribution. Then broke out, hit fair price, broke out and said buy. Gold said buy, and I wouldn't be surprised at all to see us get all the way up to 26.93 today.
yeah.
Now, I think it'd probably take a couple more days, but still, gold went back to my buy signal. We're hedging inflation, and I've been showing, you know, my price ratio. Price ratio is my dual approach to inflation. I look at gold alone, I look at gold versus bonds, I look at commodities versus bonds, and we are still at the hottest inflation data as far as commodities versus bonds in history. We have not pulled back from here, and gold is a great buy, I think. And you know, I'm not a gold bug. I do
Right.
not believe in buy and hold gold.
Well, I mean,
This good.
you have the scenario where yields are rising and gold's not selling off in a major way. So I mean, it's a really interesting dynamic. I'm kind of thinking, okay, maybe it's the hurricanes. We're gonna have to spend a lot of money there and other things. So we're holding up dollars weakening in the face of the fact the Fed is not cutting rates as much or expected to cut rates as much as they were previously. That's something I can kind of put together because this whole week's been a really interesting and kind of a mixed up week or confusing week for the markets.
Yeah, and the confusion we saw, it wasn't just you, it wasn't just me that we're going, wait, what's going on? It's why we had an increase in volatility, had wider swings up, down, and you know, if you follow it's us in the futures room, Tony and Corey and I are like, bullish, bearish,
Yeah, right.
because you don't sell options generally in futures, and they just kept swinging back and forth, back and forth. Now, copper is, you know, my indicator of whether or not we're in growth, and this did not give us as much of a bounce, and so I see high inflation and a minor bounce here. This is still taking us back to that cusp of, is it stagflation or is it inflation? And if this rolls back down, we've got stagflation again. Yeah. And it doesn't look promising to me. Now, the biggest reason why I love having you on is not only our interactions, but the fact that we can fight over Bitcoin. We'll get to earnings in a minute. What is going on here? What's your view? What's your take? And I've got my long-term channel or lines here, and excuse me, my long-term lines are primarily looking at super trends, 40, 50, and 200 super trends, and it works even on Bitcoin. You can see these amazing cross up, and it just runs and runs, pulls back, crosses up. Well, we've crossed all the lines on the way down here, but even I am looking at the same from a technical perspective. I'm looking bearish, and but at the same time, I'm in this quandary because if we're dealing with superinflation, do you think, as Brandon and Brandon's view, do you think that inflation will push Bitcoin all the way back up? Is the collapse of the US dollar as a reserve currency and a rush to a crypto something that you expect? Or conversely, when we find out who this real Bitcoin inventor is, like everybody's starting to hint at, is it going to happen? And will that really crush the value of Bitcoin? Do you think that's even a possibility?
Well, I don't think that even knowing who created Bitcoin really necessarily matters. But clearly what we have here, when you look at BTC, this is a paper Bitcoin, right? So there's Bitcoin and then there's paper Bitcoin that people can use to speculate. If you buy Bitcoin on a platform, you can do it in a very leveraged fashion. And so we had that run up earlier in the year from 40,000 to 80,000. And so again, that's a paper move, right? The dollar did not decrease in value by 100%, right? So the point is that this is not a pure weak dollar play. The paper market for Bitcoin is probably more significant than all the holders of Bitcoin. So right now we're seeing that Bitcoin is losing its status as a to preserve its buying power, right? Because the paper market, the speculation part of it is still preeminent. But at some point it will reach kind of a value where it will start to take off. And maybe that's what we're seeing here. So I like the fact if we see a continued weak dollar that this should move higher as we work through the speculative excess.
And I like the reminder that, is it a preservation of value? Is it a place to hold money? My son, the video that I threw on at the beginning, he came into me and said, "Did I say the right things about what a currency is?" And I said, "That it's just a matter of a instrument for exchange, right?" And I said, and a preservation of value." And he said,
Yeah.
"Perfect." And he rushed off to change his
Put it in there.
lyrics.
Right. Yeah. I mean, but right now, that is the struggle with Bitcoin. I mean, the more adoption it gets in terms of on an institutional level, it should help create more stability to the price. But you see this with gold all the time too, where you have the paper market for gold really take over. And sometimes you see those bigger sell-offs or bigger runs that would just be a function of dollar weakness or strength.
Right. And I always fall back to this, that the correlation, and I know this is not a perfect situation, but no correlation is. If it was, if there's a perfect correlation, it's just this, like gold futures versus GLD, paper versus physical, and that's the closer you're gonna get to a perfect correlation. But I still see Bitcoin, as you can see, an inverse correlated instrument. So when the VIX is high, it's time to buy. I don't, the old adage goes, no, when the VIX is climbing or the volatility is high, then the Bitcoin generally falls. And so you can see that this is 0 and -1. So the majority of this last year, we have maintained the VIX counter or inverse correlation to Bitcoin, or Bitcoin's counter correlation to volatility. And we can go all the way back into multiple years. And so when the VIX was climbing, Bitcoin fell, and vice versa. But it is interesting to me where we keep piling on, we keep spending, and the cuts that were happening were only going to create more inflation, which, I mean, again, I'm not a gold bug, but I'm really not a Bitcoin bug. And I started looking for Bitcoin buy opportunities, and I'm just not that kind of person. And the question is whether there's going to be influence to the downside or influence to the upside with the VIX remaining high. And I'm very intrigued by where we're at this moment.
We had on Monday, I mean, there's some significant call activity in Riot. So we kind of looked at an out of the money call spread because I mean these stocks have high short interest and positive skew, and just looking for a short squeeze in just a little short squeeze in Riot. Pete asked, why would you buy anything no value? The reality is that's money has no value, right? So if
I was
Bitcoin
going to
is
say, is he
money,
talking about the dollar?
you're right. I'm like dollar two, right? But the point of money has no underlying value. You can't see increased demand in certain times and growth times and not. The fact it has no value is what makes it money. Gold really has no economic value either, other than as a store of value and a medium of exchange. That's what makes it money historically.
Yeah, and
Put that in the music video.
yeah, it is in the music video. You just gotta listen to the lyrics. So I'm just kidding, but this is interesting to me as well. This is Kitco. So this is comparing gold to all of the major currencies. So the only one, the ruble, is the only one that didn't lose to gold's value. So again, it's the perceived value. Does gold have value? Yes, as a commodity to be used in medical devices and electronics. Can't be eaten. It is only because we'd accept it as a currency. Now, here's the question. If everybody wants to say that gold is a currency or Bitcoin is a currency, if you run a business and someone walked into your business today and with a little rock and said, this is gold, it's gold nugget, I got a gold nugget here, are you going to accept it?
Some
If you
would.
ran it, huh?
Some people would, but not very many, right?
Well, yeah. I mean, how do you know? How do you know it's real?
That's
So
fries.
yeah, here's I'd like 5 fries, please. I've got this gold dust I want to give you. If someone walked in with gold dust, so I think
But to that
I'd
point, though,
probably be
Blake,
more likely to take gold dust than a gold
I
nugget,
mean,
right?
you do have. I mean, it's not available in every state necessarily because we have taxation of gold. But the idea is that in Utah, there is a bank where you can deposit gold and you can have a card on it, and they'll do the internal exchange rate for you. So I mean, there is some ability to do it. But yeah, but obviously for bigger purchases, and namely banks, for example, they do use gold, right?
Yeah, and there, I'm just saying that even something that people are sure they trust, like gold, you're really not accepting it as a medium of exchange. If you ran a small business, if you ran a Subway, someone walks in and puts a little gold nugget on the counter, you and your staff certainly do not know how to handle that.
No.
Yeah,
But
and
our local gas station does take Bitcoin.
do they really?
And they have a Bitcoin not a vending machine, but a Bitcoin ATM machine kind of thing.
Yeah, and they also have bumper stickers that and camouflage, right, down at that gas station.
Well, I think they might be from Pakistan.
They're
but,
just ready to take the Bitcoin and go with it.
Right.
Yeah. So
Like Giselle, man, come on.
and I do. It is getting more and more accepted, and I think that's a way we can certainly approach the market as we go. Is the more acceptance it gets, the more easy it trades, the more we can trust the acceptance of it and use of it, and just like we did the U.S. dollar. And I think it can be a safety. But while we have that volatility index, I think that is the issue for me. The volatility correlation, excuse me. The issue for me is it's still just a speculative risk on asset. And if we can break through the top on this crude prices, I'm going to be avoiding things like Bitcoin and going to invest more in crude and gold because they have a higher acceptance rate as far as simply trading. So, all right.
And quick on Permabear, you'd actually just temporarily convert Bitcoin to a token of some sort that has low transaction costs, not as secure of a network, provided to do the transaction and convert it back to Bitcoin.
Yeah, and that's what my son is asking the same thing about Bitcoin. He loves to talk about economics and stuff, even though he's not an economist. And he same kind of thing. He said, so how do people accept it? What do they do? And I said, they literally change it into like Tether or something, some other conversion asset, and then give you US dollars. So even if you have a PayPal credit card that says that you can use Bitcoin, it still is going from Bitcoin to Tether or something else and into US dollars. And so even the companies that are accepting Bitcoin, unless they have an instrument to truly accept crypto and straight across crypto, they are going to really be taking dollars. You may be spending your crypto, but they are accepting dollars. Exactly. So it's still there. The dollar is still king. No matter how much we don't think it is, the dollar is still king. And if we look at the dollar's recovery right through here, this is an amazing move. Look at that. This is the largest bullish move in years in the US dollar in a single week. This is one of the strongest moves we've seen. It's bigger than this. It's bigger than, I went back on the weekly, and I think we went back 10 years to find this type of a move. The dollar is unwinding the 50 basis point cut. They shouldn't have done that. We're unwinding it. We're unwinding future cuts, and the dollar has gained from 100 all the way up to 103. That 3% move, I want to remind you, a 3% move up in the US dollar generally sees a 2.5 times whatever, that's an X, down in indexes. And so this dollar gaining against other currencies, this is really unwinding the selling of the US dollar, and we're not seeing the reaction in the equity market because it's the dollar's purchasing power against other coins, other currencies. It's not just the purchasing power in the US equity market or bonds or gold or anything else. All right. Let's do this. Can we talk about really quickly? Let's talk about earnings and bulls and bears. I do want to talk about some of the shifts that we see. I've got the long-term changes here, and I do want to show you that not only has the dollar recovered this far and the largest single bullish move it's had in years, we still haven't crossed the 40, just the 40 versus the 50 haven't crossed up yet in the US dollar, but it is getting close. And if the dollar can get past its 200, you should expect to see another 3 to 4% move up in the US dollar, but this is primarily against the euro. So no one's talking about the euro's weakness. No one's talking about the fact that the euro has indicated they're going to cut rates, that they're poised to cut rates. We've already created a double top. We've already reversed off this. If you're talking about price patterns, almost perfect textbook type double top. And there's still more downside for the euro. This is dollar strength, the euro weakness. So most of that dollar index is the dollar saying, whoa, we overshot, and the euro hasn't cut enough, or hasn't cut what they're going to cut yet. And so keep an eye on that dollar. The euro trade has been a good trade. We've hit multiple targets, and we've hit multiple targets, and we're going to hit multiple targets, I believe, if the European Central Bank continues to cut. And I think that is why the dollar is looking phenomenally strong, and also a reason why you got to be careful with jumping over to Bitcoin while the dollar is recovering. All right. Let's talk. And actually, I'm just going to go really quickly. That's a screenshot from the JP Morgan. JP Morgan was worth about $2 billion back in the day. So JP Morgan had earnings, Wells Fargo, BlackRock, Bank of New York Mellon, and Fastenal. But it's banking season and earnings season. Did you look at the reports at all this morning? Did you get a chance to before we went live? They beat every single one of them. I'm honestly surprised. JP Morgan beat earnings. They came in at 4.37 versus 399. They had revenues of 42.65 billion instead of 41.5 billion. Wells Fargo up. They had lower revenues but beat earnings. BlackRock beat earnings by 10%. Bank of New York Mellon beat earnings by about 20%. And so all the banks are beating off of this quarter. And I'm surprised. I'm just going to tell you flat out, I was surprised. With as much as they're carrying a bad debt, they're still not recognizing the bad debt. They're not mitigating the bad debt, and their earnings are outperforming.
Well, I think that's an important thing is remember is that, look, I mean, banks don't have to value their assets the way that other people do or companies do. So the idea is that they can just kind of carry this stuff and it's not really impactful until eventually it will be, right? They should be trading below book value at some point. But JP Morgan's erased all their gains off the announcement. They're back to, at least in the pre-market trading, where they were. You know, it's just the idea that maybe they're pulling money out of loan loss reserves to make it look better, or the steepening yield curve may have helped them this past quarter. But the point is maybe just trade has helped some of these companies or these banks. That's why I just don't look at banks' financials, analyze the fundamentals, because how do you value a bank? I mean, it's very specialized knowledge, and the reality is we're mushrooms in a cave when it comes to banks and their profitability or their fundamentals.
But at least you're fed. I mean,
that's right. We're fed. We're fed stuff.
You're kept in the dark.
We're back guano. We're fed back.
That's right.
Guano.
You're fed. At least you're fed. All right. So and there is some obscurity in there, right? There's definitely some things we are kept in the dark a lot of times, as the old adage says. And the banks and their situation with their billions and billions of dollars of unrecognized losses, the only way they overcome that is that they sit on those unrealized losses for decades. Yeah. And that's kind of it. So let's go through our bulls and bears really quickly. I'm not going to spend a lot of time here. My main thing is, and I maybe set up my wrong page. I did. Where's my other one? All right. Well, I had my list here and I apparently didn't save it.
Oh no.
So main thing, and I talked about this in yesterday's video, so I won't take a lot of time on this one because I want to get back to those currents and some of the changes that we're really seeing. That shift that we're seeing in the overall market is pushing towards some changes, definitely in oil and some of the energy stocks, but bonds are starting to shift and trying to decide which way they're really going to go. And so I'm still looking at long oil stocks. I'm looking at taking positions in Schlumberger, even though Valero was listed there. It was not the one I was primarily looking at, and I'm going to add Halliburton to the mix. So we based out really clean on Valero. It's just a matter of whether we can get the momentum up. I like Schlumberger's higher highs and higher lows. And if we clear this level, it's kind of a weird, maybe got a goiter there. It's a head and shoulders upside down. So if we break through, there's a Seinfeld reference for you. 39 to 46, I'm looking for about a $7 move, almost a 20% move, and getting up all the way back up to 55 in Schlumberger.
You saw a lot of call activity last, I think it was last Wednesday, a week ago, in
Mhm.
Schlumberger and Halliburton, and the structure of the volatility is actually favorable for doing call spreads, for example. Whereas a lot of stuff you have negative skew, but these are actually two that you can actually do reasonably priced call vertical in out spread or even out of the money.
Yeah, and the volatility skew that you're getting there, for those of you maybe that haven't followed Brandon on his unusual option activity and what he looks for, when you can buy a lower volatility and sell a higher volatility in the
I love
direction of
selling.
your overall trade, it's a perfect. It's chef's kiss. You get to reduce your risk while increasing your return, and so they're excellent. And that's what we're seeing on Halliburton, Schlumberger. The options are set up that way, but the chart is also giving you higher highs and higher lows and pushing up to the next level. Now, you saw as an XHB, I prefer to trade ITB. XHB is kind of
Mm.
the one that everybody goes to. So I'm going to go over here to XHB for you. What did you see going on in XHB and home builders in association with your unusual option activity? I mean,
Yeah,
I
I mean
saw some stuff here
yesterday
too.
there's put activity for the Jan 123s. And yeah, it's just representative. I'm like, you look at, some of the components of XHB, Home Depot and Lowe's, they were kind of up, but the reality is I'm like, we're probably overbought. And then obviously the weight of the home builders is itself with rising yields. ITB, like you said, is probably more of a pure play on those interest rate costs.
Yeah, and the interest rates, if we're unwinding the 50 basis points, or we're unwinding the what 150 basis points that we originally were pricing in December, we're saying that the price to refinance or buy new homes is probably going to go up and probably going to slow down XHB. XHB has a lot more non-home builders in there. And if we're talking about the literal building construction companies, the home builders themselves, not just home building, ITB is a little bit more balanced that way, but the chart looks identical. So I'm looking very bearish on ITB, XHB, and trying to participate in the next leg down. Did you see the link that we were sharing in our TheoTrade group on the number? Oh, you were the one that shared it
Did
on
I?
homes being listed in Florida.
Oh yeah. It's
Yeah.
crazy.
So, I mean,
It,
how thousands of homes suddenly being
right.
listed in Florida. So we have this inflow of supply. They were already 40 some percent higher than the previous year before the hurricane.
Yeah.
And so the amount of homes going to be available and up for sale at deep discounted prices by now is going to be huge. And what does that do to home builders in general? If people say, well, I can take the risk because I can buy a home there for $200,000 less, that can help me pay for very expensive insurance. And I'm not going to buy the homes in this market over here.
Right. And that's really what we've been waiting for. When are going to people, when is the inventory going to release just by virtue of people selling their home? Because they've been locked in with the lower rates and higher rates to borrow now. So it's like we're kind of in this like sticky situation. But again, right now, maybe, and the implication of that tweet was that maybe a lot of these are vacation homes, right? That
Yeah.
people listen to VRBO or the other one that I won't like to use, but they'll never
Yeah.
name. No, but
You won't name their name. We all have our little pet peeves against certain companies, don't we?
they could charge you more.
Exactly. And then you get surprised with the extra fees. It's only $100 a night plus $500 for listing,
And
right?
cleaning. It's like,
Yeah. Yeah. They add and they nickel and dime you. But yeah, what if all those are short-term rentals, STRs? And if they are STRs, this will bankrupt them, which means who ends up holding them back? Could this be the catalyst, Brandon? And this is, I was thinking about this the other day because I was thinking about 2008 because we're talking about the VIX spike. We had the largest VIX spike since 2008. Could this be a catalyst or that final pushover domino that says all those short-term rentals that people are going to liquidate, that pushes back to the banks? Remember, the crisis in 2008 hurt the banks because they're the ones that hold the banks or hold the property when people default.
no,
No,
Blake, it was the fact
no.
they had to
Okay.
recognize it. If we didn't force banks to recognize they had no clothes on, we wouldn't have had a crisis. I mean, that's the logic that you're a typical economist
If we can just, but will they have to recognize if all these homes default,
No,
if they go into
never.
foreclosure?
Just
Never have
close
to.
your eyes. Don't
I
worry
don't
about
have.
it, Blake.
I didn't take all those properties
Everything will be
in-house.
fine. Just let the controllers, let the central planners of the Fed and our federal government, Treasury, do their work.
Well, and I pulled up the Treasury notes here. Remember, the rate cut was supposed to make things easier and money flow easier. We went from 3.6 to 4.1. So our borrowing rates actually went up and not down. And it accelerated as they talked about the fact that they're not planning on doing the rate cuts as quick. I think we could return all the way back up to 4.6, and the whole 50 basis point cut, all it did was cost the you and I purchasing power and didn't save anybody money on borrowing costs. And we're already there. We've already erased all the way back to July, which means September rate cuts didn't do anything. We did nothing
Blake,
to
you'll
benefit.
get less money on your interest for your
Right.
the Fed
That's
cuts,
true.
long-term rates
That's
go up.
true.
We get less money in our bank, less money, less interest in money markets, and we get to pay more, right?
It's
Exactly what they want.
lucky us. So
Right. You loan nothing.
you will have nothing and be happy. You will like it. So as we're looking at this is what I'm looking at again. The bond prices are selling off, selling off, selling off. This pullback to me is back to the previous highs. We're at a key level for the week. If we bounce and kind of skate through here, I would say that is an opportunity, but this is a very, very deep pullback. And I'm still looking for opportunities to step into bonds. If we do see any future indication that we're going to say go back to the idea of rate cuts, these will give us a bounce and move higher. But I think the fear play is still a possibility that we see money move as a flight to safety. And right now, this is discounted. We dropped down 3% on bonds. And so we're going to discount it off the top here. But if this crosses down and we get through the 200-day moving average, the posture changes. We get into this lower highs, lower lows, lower highs, lower lows. It's right there for me. It's about 111. So we don't have a lot further to go before I think we either bounce or break. And that's where I'll be watching for that in bonds. Bonds are definitely set up for this next move. And the dollar, again, is pushing up to these levels here, which is either bounce or break here. And if we break, this, what could have been a Gartley pattern, is destroyed. And we finish that euro down, dollar up move all the way back up to 106, 107. Yeah. Richard says, how much is flood insurance going to be in Florida now? And Tim points out the ZB is down over 6 points this week. Exactly. That's what I'm getting at with the bond. The bonds are about to flip over. It's either bounce or break time. And that's what I'm really looking at as the next big move. Your next real opportunity is in bonds, in my view, from the long-term trends, the long-term setups. All right, Brandon, we're getting the hook. So I was going to talk about a couple other trends. Join me in the main room. I'm talking about some long-term portfolio. Brandon, what are you talking about today? Do you know?
We're going to look at top-down analysis. We're going to look at what areas are performing well in the past week. We'll look at updating some of the positions we've talked about in the last week in terms of options. Look for opportunities to roll or close some of them if we get some movement.
All right. Well, thank you. Don's coming up next. He'll take you into the open. Have a fantastic day, everybody. We'll see you again shortly.